let's come to another allied topic, allied to inflation and credit offtake. The recently concluded fiscal FY15 has actually witnessed the highest ever mobilization of money through corporate bonds on a private placement basis. This is the data coming in from Prime database. I just want to put this in contrast. We have been grieving for the longest time that loan growth from banks is standing at about 10%, or in some months, the latest month, even less. But Mr. Prithvi Haldia of Prime database is telling us that private sector, private debt, or raising money from the private space has actually increased by 60% year on year. So people are not raising money from banks, but they're raising money from private sources. That's an important positive. We will get Mr. Prithvi Haldia in a minute. All right. Mr. Haldia, we have you with us?
Yes, how are you?
Very well, thank you, sir. This is positive news that you are giving us, that private debt has risen 60%. We were bemoaning that bank debt has risen only by 10%. Why this contrast, you think?
No, so bank debt, basically when we're talking of bank debt, we're talking of, you're talking of bank lending to corporates.
Yeah, bank lending, that's what I meant, yes.
Yeah, so this is basically money raised from the market for onward lending, because financial institutions, if you look at the data, 74% of the entire money has been raised by the financial sector and not by the corporates.
Okay.
So, and obviously financial sector is raising this money to further do on lending. So, banks are obviously, not only through the deposits but also through bonds. They are obviously sitting on a bigger pile of money than ever before. And the lending has to start off. I mean, what we have not seen is the credit offtake.
Okay.
Of the kind that we
But can we conclude, sir, that looking only at bank loan growth, we get a very depressed picture of credit? If we add to it the debt raised from the market, would you say that the loan growth picture looks less bleak, looks better?
Yeah, to at least one extent that, this year we've also seen a huge 80% plus, increase in the mobilization by the private sector directly from the market. So as against 88,000 crores that the corporate sector had raised from the market last year, this year it has been almost double, it has been 80% more at 1,60,000 crores. Okay. Now, this is going directly into the, manufacturing and public services sector. And that's good news. But I think that with more money and now being available with the financial institutions and banks and, organizations like PFCs and RECs, etc., there will be money available during the current fiscal for lending on to the corporates.
Okay. Sir, this is a data that you have given us for FY15. Are there any trends available as to suggest what has been the pickup in the first 2 months of this calendar year?
I don't have the specific numbers right now, but on a general basis, yes, the raising has been pretty buoyant even in the first 2 months, April and May.
Oh, that's positive, because I expected I expected you to say otherwise, only because all of last year we saw a seminal fall in bond yields. I mean, bond yields at the start of last year, government bond yields were, closer to well over 8%. We have seen a good 70 basis point fall. But now that has stabilized. Even after 3 rate cuts from the Reserve Bank, we've got kind of a stable at 7.9, 7.8%. And banks are passing on base rate cuts. So do you think this year the difference between bank loan growth and private loan growth will not be so wide?
I expect more and more money to be raised from the market, because there are two things. One is that banks have become slightly more cagey about lending.
Okay.
There's all the NPAs and all the stress that has been brought about. Number two, private sector, there are now companies which have reached a stage where they're able to get a reasonable rating to be able to access the market, which is faster and cheaper. So I do expect the overall mobilization to go up, but within that, the direct users, the private sector, as well as PSUs who are into manufacturing, etc., to be raising more money within the current year from the market.
So what are the trends, if we could break it down, for sectors like power, infra, or even housing, if you could tell us?
Power and infra and housing obviously are the strongest sector. If you look at direct raising by the power sector companies as well as by organizations like PFCs, REC and Power Grid Corporation of India, between the three PSU institutions who basically use the money for private sector, for power sector, we have 92,000 crores which was raised during the year. Now that's a huge amount of money. HDFC was, within the private sector, HDFC was the largest mobilizer along with LIC Housing Finance. So between LIC and HDFC, collectively they raised more than 54,000 crores. So I think most of this money is actually going into the infrastructure and housing sector, power and the housing.
All right. We leave it at that, Mr. Haldia. Pleasure speaking with you. Thank you very much for elucidating and putting more color on the nature of debt raising from the market through a private placement.